Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. You know, there is no place like home. So if you tuned into the show last week and you listened to my Ask Mike Anything episode, I took a little vacation last week. I played hockey in a tournament out in California, and I had an absolute blast, but honestly, I didn't get a whole lot of sleep. And then you throw jet lag on top of it, and I'm still dragging, I'm not going to lie. But anyway, I am glad to be home. And the thing about home is it's comfortable, right? It's familiar. I feel more in control of my whole life when I'm at home. I know where everything is. I know how everything works. It's just better at home. So here's the awkward segue into the subject of today's show. A lot of countries have decided that it's better having their gold at home. They want to bring their gold, take it out of foreign vaults, and bring it back to within their own borders. There's a growing gold repatriation movement. Countries want to have their gold reserves within their own borders because it gives them control. It makes them feel more comfortable. It gives them a sense of security. So it's not unlike my preference for home, right? So maybe the seg wasn't too awkward, or maybe just a little, but that's okay, because that's what we do here on this show. But anyway, today I want to dig a little deeper into the gold repatriation movement. But before I get into all of that, I do want to touch on a precious metal that really doesn't get quite as much attention as gold and silver. And I don't know, maybe it should. I'm talking about platinum. And if you're listening to the show, you probably know that gold outperformed every major asset class in the first half of the year. Outperformed stocks, outperformed bonds, outperformed foreign stocks, outperformed every other commodity, except one. Do you know what the top performing commodity was? That honor goes to platinum. Platinum charted a 49.8% gain through the first half of this year. It rose from around $900 an ounce in January to $1,360 an ounce at the end of June. And that 49.8% gain compares with a 25.9% increase in the price of gold and a 24.9% rise in silver. So precious metals did awesome. Gold and silver did awesome. Platinum was kind of the king of the hill. In the second quarter alone, platinum jumped over 35%. It closed H1 at a price not seen since 2014. And that price momentum has continued into July. Platinum closed at $1,406 per ounce yesterday. So it's picked up about another, $45 an ounce since the beginning of June. Now, supply constraints seem to be the primary driver behind this platinum rally. Of course, it is also, I think, piggybacking on the strength of gold, the strength of silver, the strength of commodities in general. We've seen dollar weakness, but there's a significant supply concern with platinum. The global platinum market charted its third straight significant structural deficit last year, and we should expect those supply shortfalls to continue into the foreseeable future, according to the World Platinum Investment Council, or the WPIC. So, a little bit like the situation with silver, right? We've talked a lot on the show about the fact that we've seen market deficits in silver. And what that means is that the demand for silver, the amount of silver being used, is greater than the amount of silver that's being dug out of the ground. The demand is not keeping up with the mining and recycling supply. So what that means is folks who need platinum, industries that need platinum, they're having to tap into the above ground stores of the metal. So according to the WPIC, platinum demand outpaced supply by 995,000 ounces last year, almost 1 million ounces. And that was 46% higher than the forecast. And the WPIC expects a market deficit of around 848,000 ounces for this year. Interesting kind of correlating statistic here. Above ground stocks of platinum fell by 23% last year and are expected to drop another 25% this year. So that kind of goes to what I was saying. You don't get enough platinum out of the mines, then you have to dig into above ground stocks. And in order to do that, you have to entice people to sell it, right? So that's why you're seeing this increase in price. Now, this supply deficit isn't expected to ease anytime soon. The WPIC noted in a recent report that the metal is historically price inelastic in the short term. So all that means is supply and demand don't quickly respond to changes in price. The WPIC said, despite this rally, we do not anticipate any meaningful supply or demand response in the near term. Our May 2025 platinum quarterly forecast a 4% year-on-year reduction in both total platinum supply and demand in 2025, and this view remains unchanged. So what is platinum? Well, I think a lot of folks know platinum as a jewelry. When I was younger, back in the 80s, platinum was extremely popular. In fact, platinum was more valuable than gold at that point. I'll get into that in a second. But it's not just jewelry. It's not just a pretty metal. It's an important component in automobile catalytic converters, and auto demand for the metal hit a 7-year high in Q1, and that pace is expected to continue through the rest of the year. A rotation from electric vehicles back to hybrids is boosting demand for platinum in the auto sector, according to the World Platinum Investment Council. Quote, platinum demand is bolstered by stricter emissions legislation, increased hybrid vehicles that contain an internal combustion engine, and growth in the substitution of platinum for palladium. It is important to note that once platinum is substituted for palladium in specific vehicle platforms, this demand for platinum is likely to remain constant throughout the platform's 7-year life cycle, even if platinum prices rise to or exceed those of palladium for an extended period. So, in other words, when they make the rotation into platinum, you can use both platinum and palladium in catalytic converters. So they kind of go back and forth depending on the price. And as we've rotated back towards platinum, that's going to continue for a while because you don't just quickly spin back to the other metal. Incidentally, palladium has also done well. I think it was the fourth best performing commodity last year. And then I mentioned platinum jewelry. That demand has also charted a healthy increase in the first quarter. It rose by 5% year on year and was driven by a 53% increase in Indian jewelry buying. Indians love jewelry, and so they're starting to get into platinum. That could further raise demand. Now, it's interesting. I mentioned the price. If you go back to prior to 2011, platinum was actually generally more expensive than gold. In 2015, this historical trend reversed, and the spread between gold and platinum grew wider in the preceding years. Platinum hit an all-time high of $2,213 an ounce back in March 2008. This was higher than the record price of gold back in 2011. So it remains to be seen whether platinum will ever regain that price parity with gold that we saw before the mid-2010s. But if you look at the supply and demand dynamics, it's reasonable to be bullish on platinum in the near term and the midterm. Given the price disparity with gold, this may signal a buying opportunity. So in other words, even if it doesn't ever get back to where platinum and gold are in parity, even if it closes that gap, platinum has a long way to run, right? So we've got gold right now, over $3,300 an ounce, and we still have platinum under 2,000. So there's a lot of room there, a lot of potential ground that platinum could make up. Now, platinum isn't just an industrial metal. It's not just a metal that makes beautiful jewelry. It's also an investment metal. Did you know that the U.S. Mint produces platinum coins, and you can purchase these platinum coins at Money Metals Exchange? The American Platinum Eagle is one of the most popular platinum coins in the world. It's available in various sizes, including 1/10, 1/4, 1/2, and 1-ounce coins. The nice thing about the fractional sizes, those smaller coins, is they make the coins more affordable, right? It lowers the barrier to entry, which is perfect if you want to get started in platinum investment, but you don't have the cash to purchase a full 1-ounce coin. So you can check that out. Go to moneymetals.com and you will find those American Platinum Eagles and other platinum investment products. Okay, let's talk about gold repatriation. Serbia is the latest country to announce plans to bring all of its gold back to within its own borders. And currently, Serbia holds about 50.5 tons of gold. So it doesn't have huge gold reserves, but pretty healthy gold reserves for a very small country. That gold currently is valued at roughly $6 billion. Now, the country actually began repatriating its gold back in 2021, according to statements by bank officials during a recent Q&A session. And they said they did so because of an environment of increased global uncertainty. Quote, by returning gold to the country, the National Bank of Serbia sought to increase the availability and security of gold reserves in periods of crisis and uncertainty. So in other words, if something goes down, they want to be able to quickly and easily access their gold. They don't want to have it sitting in a vault in Switzerland or England where they can't quickly and easily get to it if they need it. So currently, all of Serbia's gold is stored in Belgrade, except for about 5 tons, which is currently held in Swiss vaults. And the National Bank of Serbia plans to bring that gold home, quote, as soon as possible. So that would make Serbia the first European country to store all of its gold within its own borders. Now, bank officials say that they weighed the pros and cons of repatriating the gold before they made the decision. And they pointed out that it's actually easier to sell and lend gold when it is stored in market hubs such as London or Switzerland. But ultimately, they decided that the security of holding their gold at home, where they could easily access it themselves and nobody else could take control of it, that outweighed the convenience. Now, incidentally, the Serbs have also been expanding their gold holdings. The National Bank of Serbia added about 36 tons of gold to its reserves since 2019. It bought about 17 tons from abroad, and then it purchased 19 tons from a domestic mine. Serbia is one of a growing number of central banks that are adding to their gold reserves. And of course, I've talked about this a lot on the show. In fact, this central bank gold buying has kind of been the underpinning of the recent gold rally. It has really supported demand over the last couple of years. Central banks globally have bought over 1,000 tons of gold each of the last 3 years. And to put that into some perspective, central bank gold reserves increased by an average of just 473 tons annually between 2010 and 2021. So over the last 3 years, the pace of central bank gold buying has basically doubled, a little more than doubled. A recent Bloomberg report noted that the pace of central bank gold accumulation actually doubled after the U.S. and its Western allies imposed stiff sanctions on Russia after its invasion of Ukraine, quote, highlighting the political risk of holding dollar and euro denominated assets. So this is kind of the key here. The way that the United States and the West has handled economic sanctions has made a lot of countries wary of allowing other countries to be able to control their assets. Makes sense, right? I mean, we can debate whether or not such an aggressive campaign of sanctions was the right move from a foreign policy standpoint. But there's definitely backlash, and we've seen that. And we've seen more and more countries de-dollarizing, saying, hey, we don't want to be too exposed to U.S. assets, to U.S. treasuries, if the U.S. is going to use that against us if we don't do what they want in a foreign policy setting. The Bloomberg report also pointed out that storing gold domestically also, quotes, shields them from this kind of interference. So Serbia is one of a bunch of countries that have brought gold home in recent years. Jan Nieuwenhuis who's an excellent investigative reporter. He works for us here at Money Metals. He recently reported that the share of global official gold reserves not stored at the Federal Reserve Bank in New York and the Bank of England in London has reached 78%. That was in 2024. That's down from 51% in 1972. So to put it another way, world official gold reserves, minus the gold owned by the US and UK that's stored in New York and London, have reached a historic low of just 22%. So all of that to say, it's clear that a lot of countries are pulling their gold out of New York, they're pulling it out of London, they're also pulling it out of Switzerland, and they're bringing the gold home. Based on calculations by Neuenhaus, including gold held by China and other Asian central banks off the books, non-Western countries, aka the rest of the world, possesses 18,643 tons of gold. That compares with 21,470 tons held by countries in the West. And pretty soon, the majority of official gold reserves will be owned by the rest of the world. Non-Western countries currently hold about 46% of the world's gold reserves. So we're seeing this pivot. Gold is moving from west to east, and we're seeing this in these movements of reserves, these changes in reserve holdings. Now, of course, this has ramifications. Neuenhaus writes, quote, "Interestingly, the shift in the share of world gold reserves towards the rest of the world is illustrative of global changes in economic and military power. As we are moving towards a more multipolar world, so too are global gold reserves distributed accordingly." So, as the saying goes, whoever holds the gold makes the rules. Eastern countries, Neuenhaus writes, will implement rules not in favor of the greenback. They will likely be able to circumvent the dollar by trading in national currencies through Project Enbridge and store surpluses in gold. So this is really just part of the bigger de-dollarization story. And we've talked about de-dollarization on the show a number of times. And this is just the fact that, again, many countries are wary of holding dollars. They're holding fewer dollars. They're holding fewer U.S. treasuries. They don't want to be manipulated. They don't want their assets frozen. So they're basically just saying, hey, if this could potentially be used against us, why not just mitigate that risk completely? And this is a huge story because, as I've discussed, if we see a de-dollarization, even a modest de-dollarization, it's going to have huge ramifications for us here in the United States because we depend on the world wanting dollars, using dollars, holding dollars to keep our domestic inflation down. The fact that the dollar is the world reserve currency allows the Federal Reserve and the U.S. government to increase the money supply at a much faster pace than it otherwise would. That means it can borrow and spend at a higher level than it otherwise would. So you can see the problem here with the potential de-dollarization. You don't have to have a currency crash or, a situation where the dollar loses its reserve status, because I don't really see that in the near future, at least. But even again, a modest de-dollarization will have inflationary impact on the U.S. domestic economy. So I digress a bit there, but I think this is a really important point. So let's look at some of the countries that have brought their gold home in recent years. Most recently, India brought home another 100 tons of gold. That was in 2024, following the repatriation of 100 tons the previous year. So in 23 and 24, India brought 200 tons of gold back into the country of India. In 2019, Poland brought some 100 tons of gold home. Hungary and Romania also repatriated some of their gold reserves around the same time. In the summer of 2017, Germany completed a project returning roughly half of its gold reserves back inside its borders. Back in 2015, Australia launched efforts to bring half of its reserves home. The Netherlands and Belgium have also initiated repatriation programs. And these are just the ones that we know about. I am guessing that there are other countries that have brought their gold home quietly. When Poland brought home its gold, the national bank president said that its gold, quote, symbolizes the strength of the country. And so it shows that a lot of these countries really value and recognize the importance of their gold reserves. It's real money, right? It can't be manipulated. It can't be inflated away. Gold is recognized all over the world. It is always been the go-to money for 5,000 years. So it makes sense that a lot of these countries are saying, hey, we want gold and we want it at home. Kind of looking ahead, this year, a growing number of people in Germany are calling for the Bundesbank to bring all of the German gold home. I mentioned that they brought about half of it home a couple of years ago. There's a similar push in Italy. For instance, the German Taxpayer Federation recently sent a letter to the central bank, and it urged Germany to bring its gold home. Quote, Trump wants to control the Fed, which would also mean controlling the German gold reserves in the U.S. It's our money. It should be brought back. The Taxpayer Association of Europe sent letters to Germany and Italy's finance ministers and to their central banks, urging them to reconsider their reliance on the Federal Reserve as the gold custodian. Quote, we are very concerned about Trump tampering with Federal Reserve Bank independence. Our recommendation is to bring the German and Italian gold home to ensure European central banks have unlimited control over it at any given point and time. Again, this is a matter of control. These countries want to control their own gold. They don't want to have other parties that could potentially interfere. And, even if from our perspective, that seems remote, like, the U.S. isn't going to interfere with the Italy or Germany's gold. I can see that, but why take the risk, right? Why not bring the gold home from a German or an Italian perspective, or for any other country for that matter? Calls to bring German gold home are coming from both sides of the political aisle. Former conservative MP Peter Gauweiler told the Financial Times the Bundesbank, quote, must not take any shortcuts in efforts to safeguard the country's gold. Quote, we need to address the question if storing the gold abroad has become more secure and stable over the past decade or not. The answer to this is self-evident, as geopolitical risk has made the world more insecure. Meanwhile, Fabio De Masi, former left-wing populist MEP, so a European parliamentarian, he told the Financial Times that there are, quote, strong arguments for returning gold to Germany in these turbulent times. And this isn't just from officials. This is there's also growing public pressure for gold repatriation in both Italy and Germany. Italian economic commentator Enrico Grazzini recently wrote, quote, leaving 43% of Italy's gold reserves in America under the unreliable Trump administration is very dangerous for the national interest. Now, I know some of you listening are very frustrated by those comments, because you're like, well, Trump's not bad and Trump's not doing anything wrong and you should trust Trump, etc. I get that. And I understand that these concerns in Europe may seem overwrought from our point of view. But it's important to remember that what we think doesn't matter, right? We may love Trump. We may think he's doing great things. But how they view it does matter, right? And we can't really project our views onto them. If U.S. actions have raised concerns abroad, policymakers need to take that into consideration, whether the worry is justified or not, right? In other words, you can't say, well, they shouldn't think that way, right? Because they do. That's just the bottom line. And it may be dumb, but that's how they think. So when you're making policy decisions, you always have to take into consideration the potential backlash, the potential blowback. Again, it may not seem justified in our minds, but this is how they're thinking. So it does matter. Now, I mentioned that there's some speculation that there are other central banks that have already moved gold out of New York, but there's a lack of transparency at the New York Fed, which I know is shocking, but it's true. And that makes it really difficult to confirm what gold is there and what's been moved and what's been brought in. It's difficult to get any information about the gold holdings at the New York Fed vault. Last year, Federal Reserve Chairman Jerome Powell actually evaded questions about central banks' foreign gold holdings that are in the U.S. And these questions were brought up by Representative Alex Mooney, a Republican from West Virginia. The U.S. Central Bank has also declined to comply with a Freedom of Information Act request for records about these gold holdings. Headline USA filed a FOIA request with the Fed, and they asked for records reflecting how much gold the Federal Reserve Bank of New York currently holds in its vault, and also asked for records reflecting the ownership stake and what governments are holding gold there in New York. The FOIA request also sought records about the Fed's gold holdings before Russia's February 2022 invasion of Ukraine. And the Fed denied all of this. So the bottom line is, because the Fed won't tell you anything, it's really difficult to know just how much gold has been moved out of the United States. Presumably some, but we don't know the exact amount. So this gold repatriation trend underscores the importance of holding physical gold free from counterparty risk. And I'll link to an article on the show notes page over at moneymetals.com/news that explains counterparty risk in detail. But basically, counterparty risk is just the risk that somebody on the other side of a transaction will not fulfill their obligation. So in other words, if I loan you $100, you are my counterparty risk, right? The fact that you might not pay me back is counterparty risk. And most things have counterparty risk. Like if you put money in a bank, that bank presents counterparty risk. Dollars have counterparty risk because the US government is behind them. Gold has no counterparty risk because there's no party behind it. Gold is what it is. Its value stands on its own. There is no other counterparty. So that's one of the beauties of holding gold. So when you store your gold in a foreign country, you're introducing counterparty risk that other country could hold your gold or steal your gold or do something to your gold. There's counterparty risk there. So this anxiety, as I've talked about already, has increased given the way the U.S. has weaponized the dollar as a foreign policy tool. And again, this has made many world leaders wary of keeping financial assets outside of their direct control. And according to a World Gold Council survey, quote, a substantial share of central banks expressed concern about potential sanctions after the U.S. and other Western countries froze almost half of Russia's $650 billion in gold and forex reserves in the wake of its invasion of Ukraine. According to the World Gold Council, 68% of the banks surveyed at the time said they plan to keep their gold reserves within their country's borders, and this was up from 50% back in 2020. One official anonymously quoted he was a central bank official that was anonymously quoted in a Reuters article, said, quote, "We did have it, the gold, held in London, but now we've transferred it back to our country to hold as a safe haven asset and to keep it safe." Invesco's head of official institution, Rod Ringrow, told Reuters this reflects a widely held view. Quote, "If it's my gold, then I want it in my country. That has been the mantra we have seen in the last year or so." So this gold repatriation trend, again, it underscores the importance of holding your gold free from counterparty risk. And I talked about this during my Q&A show last week. Somebody actually asked me, what steps do they need to take if they want to store their gold at home? And I covered that in the show last week, and you can check out that answer if you listen to last week's show. But if you store your gold and silver with a third party, you could lose your metal through theft, fraud, or an act of God. That's the concern, right? With central banks, there's also political factors, but there's always risk in having your gold out of your hand. Now, of course, you could lose your silver and gold that's stored in your home the same way. Well, except for probably fraud, unless you get scammed. But you have to weigh the risks of using third-party storage and kind of counterbalance those with the risk of keeping a large amount of silver and gold at home. Because the fact of the matter is, you cannot secure your gold as well in your house, most likely, as a bullion vault can, right? And I talked about this a little bit when I answered the question last week about storing your gold. a dedicated thief can get into most home safes. And no matter how clever you think you are, crooks tend to be able to find stuff that you've hidden. So there is risk in keeping your gold at home. And you just have to weigh those. I can't answer the question for you, what's the best way to do it? Now, if you do opt for third-party vaulting, it's very important to choose a trusted company. Do your research. Make sure that they've got the highest levels of security. Make sure they're insured. Make sure that they have audits in place. All of these things. You can research this. You can find the vaults that you can trust. I'll just throw this out there. Money Metals offers secure precious metal storage. We have a state-of-the-art facility. It's bigger than Fort Knox. It's located out in Idaho. Here's a few of the advantages that the Money Metals vault has. It is fully insured. The contents of the vault are fully insured by Lloyd's of London. Metals that are stored in your account are segregated. Okay, so they're separated. They're never combined or rehypothecated. You can't be. They can't use your gold as collateral for a loan by anyone but you. So you have full control over your gold. Depository holdings are independent and removed from any bank, Wall Street, or Washington, D.C. entity. So there's some good advantages. You can go to moneymetals.com and learn more about our vaulting services there, or you could just give them a call over at Money Metals at 800-800-1865 and talk to a Money Metals precious metal specialist. Incidentally, also a great time to, add to your holdings or begin holding gold and silver and platinum. Even palladium, as we've talked about, there's still a lot of upside for all of these metals. So this may be a good buying opportunity while things are kind of trading sideways before we hit the next leg up. So talk to a Money Metals precious metal specialist today. You can ask them questions. They're very knowledgeable. They can help you figure out how gold and silver will fit into your investment portfolio. They can help you weigh the pros and cons of storage. All of these things, give them a call. Now, I know some folks don't like to talk on the phone, and I'm one of those people, but you can go to moneymetals.com and actually chat online in a secure chat, discuss things with them there. Or if you know what you want to do, you don't have to talk to anybody. You can buy gold, silver, platinum, palladium, gold jewelry, all kinds of things over at moneymetals.com. Check out the website. Check out all of our products. You'll see specials and deals. But do it today because time is of the essence. So that's a wrap for this episode of the Money Metals Midweek Memo. You can get more information about everything that I've talked about on the show today and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up, get on our email list. Now, of course, you can subscribe to the Midweek Memo podcast on your favorite podcasting platform. And when you do, you will also be able to tune into our Market Wrap podcast that airs every Friday, where you're going to get a quick overview of the week in precious metals, along with conversations between yours truly and interesting people from the world of gold and silver, economics, and investing. I talked to Frank Holmes this week. Great discussion. So check that out. Thank you so much for listening to the show. Really appreciate it. Know you have plenty of things to do, plenty of choices to listen to. Thank you for spending some time with me. If you want to help out the show, please like, share, and spread the episodes around. That really helps us out. Crush that like button. Give us a good review on your podcasting platform, and we will greatly appreciate it. So thank you so much again for listening. Have a fantastic rest of your week, and I will be back again next Wednesday.